Okay, welcome back, every one of you. I'm I'm glad we are making progress. We've done so much about candle must close concept. Now, today I'm going to give you what I call the proper top-down analysis of candle must close concept. Proper top-down analysis. Now, the moment you understand this candlestick concept, your trading becomes much more profitable. And I'm going to give you a series of examples. Now, in our previous videos, if you have watched them, you will realize that I was using a forex pair. Now, I'm going to be using, what is it? I'm going to be using synthetic indices pair to analyze this candle must close concept. Now, remember that we started with the first thing to do is to understand direction. Every trader understands very perfectly that understanding a direction in the market is very, very key, very, very important. Now, in candle must close concept, when you understand that concept, the direction becomes easier for you, and all the energies and the things you are going to be doing within become very easy. What am I trying to say? Now, without a candle must close concept, the natural way of analyzing the market is to go into higher time frame, you mark your levels, you mark your levels. Then one of the things you do is you look for your swing, swing points and swing highs to determine structure. But when it comes to candlesticks, before you even get into marking, getting into structures and all of that, it will give you an idea. For instance, there are times you see on a higher time frame, the market is making, let's say for instance, the market is making swing highs, swing lows, and swing highs and swing lows, and all of that. Now, you look at this type of a market on a higher time frame, you can easily say this is an uptrend. Okay, this is an uptrend. Then, without even looking at so many things, you just see this alone. This is an uptrend because a structure is being broken. So this is an uptrend. Now, so if you want to trade these, you are going to be looking for markets to come to a particular level, maybe your point of interest, then you take a trade to go up again. But with candle must close concept, it's easier for you before you even, when you look at the market like this on a higher time frame, you can tell based on the candle and say, okay, today, even though the market is an uptrend, but I know the candle is going to be selling. I know the candle is going to be selling. So you know the basic way of analyzing the market gives you this idea that, okay, it's an uptrend based on structure, but the candle can give you a contrary idea that even though it's an uptrend based on structure, but today's candle is going to be selling. This is some of the advantages we have when we understand these candlesticks. Okay? Like let's that we have talked about all of that. So let's look into this market. Like I have been saying, let's look into this market here now and see. Let's go straight because this trade is a day trade. So let's go into our daily candlesticks. Okay. Now, if you look at this right now, what do you see? What do you see? If you look at this market, what do you see? You see market going this way. You can see very clearly. Okay? You can see very clearly. So what do we have here? We have structures being broken, meaning that this is an uptrend. Meaning that this is an uptrend. Very perfectly, because until this level is broken, we can, and the market comes like this before we can say Now, the direction of the market has changed. Now, let me quickly say this to you. One of the advantages of understanding candlesticks is that it brings you into the market earlier than others. It brings you into the market earlier. Now, while you are waiting for structure here to be broken, to be able to know the direction of the market, now we're already in the market taking trades. We're already in the market taking trade. Now, let's look at it again. So you look at, in my previous video, I mentioned the left side of the market. Okay? Then I mentioned a key level. Then I said when the market is coming, it means the market will continue to go. So here, I am looking at the left side here. There is a momentum, a bullish momentum. So I am hoping and expecting the same concept here on the right side here, that the market is likely going to get here before it changes direction and continues to go. Okay? But for a normal candlestick trading analysis, top-down analysis, you are going to be waiting for the market to get here so that you can buy it. But you see, you might not be able to always tell what exactly the market is going to do. It is better for you to understand what the market is doing and go with the market. Because the market that you are waiting for to get here, because for instance, you can look at it, some people will say this is order block. So when the market comes to this area, it might buy. But the market might not respect it, could just break it. It's possible. So candlestick concept is very powerful. Now look at it. As I was saying to you here in the previous videos, you look at this market, how it has behaved. You see here, the market kept going, making new highs, okay, new highs, new highs, new highs to this point. Okay, so let's assume we traded this one to this point. But from this area here, we saw a change. What kind of a change did we see? We noticed that this market made equal high and new low. Now, having done that, it's a sign that the market is likely going to come down. Because from here to here, we kept having new highs. Now we're having equal high, new low, not just new low, a very strong candle. Strong candle. Okay, a very strong candle. Now, also, we also have the left side. You see now, you see as everything is coming together. So you have the left side. So now, when you have the left side, what do? You position to trade the next candle because you know from here, the market is likely coming to this area. So you enter the market here and you see from the previous days. Now, let's see. So let's look at it carefully. Now that I've been able to determine that, okay, this market is coming down, even though the general trend and structure is up, the trend is up, the structure is up, but this is important, direction has changed. Direction has changed. What does it tell you? This tells you that you don't, with candlestick concept or candle must close concept, you don't only use the structure, the trend to determine the direction. That's what it's telling you. Because trend is up, structure is up, but direction has changed. So because the traditional way of analyzing, it means for you to say direction has changed, this on a daily candlestick, this area must be broken. Now, you might know that the direction change when you get into a lower time frame. Of course, that is okay. If you go inside to do the detailed analysis, you can know that direction has changed. But on a daily, the direction is still up. So with candle must close concept, you can easily tell if you are a day trader that, okay, now I know what to do for today. So when you have that in mind, then it becomes easier. Now, at the close of this candle now, what I did was that I now went into the lower time frame. Okay, lower time frame to now look at what you are looking for. But already, my direction is already known. My directional bias is already known that it is now going to be selling. It's now going to be selling. So I already knew that. So it becomes easier. So I'm not looking for opportunity to buy. And this is it. This is very, very important because some people are going to be looking for opportunity here to buy. But I am not looking for opportunity to buy. I'm looking for opportunity to sell. Because according to overall structure, what the market is saying is that the market is still uptrend. So when you come into analyzing here, you're going to be looking for where to buy because of this. But I am not looking for where to buy. I am looking for where to sell. This is why having this understanding is very, very key and very powerful. And it's going to help. Okay, so now let's get into what we are talking about. Let me show you quickly. So let's take let's do this. Back testing this now. Okay, so let's assume the market closes here. Oh no, it couldn't pick. So let's still pick it. Let's pick it. Let's pick it. So we are going to see. I want us to see when the market closed so that you can see what I am looking for. Now, the market has closed. The market has closed on a daily. So here I have seen this market now. I have seen this market. What did I see here? I first of all saw the left side here. Okay, I saw a momentum. Okay, first, a momentum, meaning that on the right side, I'll be expecting something similar. That's one. Number two, I noticed the market has reached a major level. Major level. And when market gets to a major level, like in our previous videos, we've talked about what we should look for at the major level. What are you supposed to look for? Now, there are things that happens at levels. Either the market breaks, we've talked about that in our previous video, or the market reverses. That's all, the market consolidate. So we have talked all of that. You can watch the previous videos. Now, for me, having seen this, having seen number one, major level, number two, left side, number three, candle. Okay, on the candle, I'm seeing double top. That is, it's not making new highs. And as long as since it's not making new highs, I don't expect the market to go up. It's not making new highs. Then rather he makes new low. They're not just new lows. I'm seeing the strength, the pressure of the candle is strong, the pressure. So having seen all of this, my conclusion is I'm going to be selling. So what I'm going to do now is to go to a lower time frame. And this lower time frame, you see, I make it very, very easy for myself. I'm not going to go to 4 hours or H4, 4 hours, like other people do, 1 hour, then go to 15 minutes. No, I don't need to do all of that. I don't need to do all of that. Is anything wrong with that? Nothing is wrong, but I'm making it very simple. So from here now, as a day trader, I'm going straight to 15 minutes. 15 minutes. I'm going straight to 15 minutes because my entry is going to be 15 minutes. Now, I was a very wonderful person using 5 minutes candle entry before, and there's a lot of things with it, but I just improve it and make it a little easier to 15 minutes. So now I'm going straight to 15 minutes. So let's change our chart to 15 minutes immediately. Okay, let's go to 15 minutes and see what are we looking for in 15 minutes. Good. So you know, so in 15 minutes, what am I looking for? Okay, so you can see, for me, I've already seen something in 15 minutes. What did I see? First and foremost, I saw equal high here. This equal high gives me an idea that, oh, this market is likely going to go down. Secondly, in 15 minutes, the structure has been broken. Okay, so having seen that now, a structure has been broken. So I'm looking for selling because I already knew from a daily candle that I'm going to be selling. So let's do a play. Let's do a play and see what happens. Okay. Now, this is a new day. I want you to look at it. Let me zoom it very well. Let me zoom it very, very well. Now, this is a new day. This is my period line that shows previous day. This is a new day. So the moment the market came to this area, it's a new day. Now that is a new day, what am I looking for? There was a previous swing low. Okay, the structure made a swing high here. It broke this area. So what am I looking for? I'm looking for opportunity to sell. Okay, opportunity to sell. So as I'm looking for opportunity to sell, I'm looking at how the market behaved before my timing. Because remember, the candle must close. And until this area, this is where the candle closes. So I'm not going to do anything until the candle closes. Because the concept is it must close. Okay, so now let's move on. I hope you are following me carefully. If there's any issue, you can send me a message. Now, look at it. The market came this way, went up, made this high. It came here, it went up, it came here, it went up, okay? Made this high, then he came here. So I'm looking at this area. Okay, so the market came here and it came here. So I'm looking at it. Oh, what's going on here? The market has broken this structure here on 15 minutes, meaning that there is a change of character. And I'm not ready to buy, I am ready to sell. Now, when you are not a candlestick person, because of the change of character here, you might be looking for opportunity to buy here. Because the overall direction or trend that you are seeing according to daily is up. But according to candlesticks, it's already down. So when this structure is broken, I'm not confused. I know this is kind of one of the things that confuses people. But with this understanding, I'm not confused. So let's go ahead and do our play. So we have a level here. So I'm hoping that the market will come to this level, okay, and come and sell. It will not break this level. That's what I'm hoping. But a traditional trading analysis, since this area is broken, you are going to be looking for how to be buying. Okay, it's okay. Structure is broken here. Okay, where is what do you call it? Where is order block? So you are looking for order block that broke the structure. You might decide to say, okay, this is the order block here. So I'm going to be buying at this area, put a stop loss below the order block, or maybe this area to buy. Why? Because according to daily, it's an uptrend. But for me, I already knew it's a downtrend. Okay, so let's play and see. So we're going and watching. You know, let's see. I need to put the line here first. I'm putting a line here so that you see where the market is coming. So I'm putting a line here. So let's play. Just watch. Okay. Okay. Now you see. Now market touches it. Good. Since the market touches it, what am I looking for? I'm looking for opportunity to sell. Okay. So good. 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 Now you see, what did I do here? Now let me show you what I did. Let me show you what I did. Now, when this market got here, this level, when this market got this level, somebody will say, oh, the structure is broken. No problem, the structure is broken to this up area. But what I did was I went into a lower time frame when I was entering this market. I went into 5 minutes. Let me show you. Let's clear this first. Went into 5 minutes. Let's see what happened in 5 minutes. Good. So that you can see in 5 minutes, what do you see? The market went up here, it made a double top here. So this is the lowest structure. So it came down. As soon as it broke this area, there's a change of character for me. So I expected the market to pull back. And as it's pulling back, I'm targeting this area. So he pulls back to this area. Then the moment I see a candle close here, that gives me a sign, then I enter the market. That's what I did. That's the simple thing I did. And I just entered the market, and you can see the stop loss is just above here. We are still going to talk about stop loss, where to place your stop loss. And if you see what happened, the market just continued to go in the predicted direction. You know, just continue to go, and that's what happened. Let's play and see what happened. You see, never went back. Never went back. You could see my marks. You can see everything going here. You see it here. So the market just continued to go. The market continued to go. Now, that's what happened. Now, let me also quickly continue to show you something before I close. Now, let me stop this. I will stop this. Then we go to today, and let's see the running trade. The running trade. I think the network is what is giving us issue here.